New friends, new opportunities, new partners. EG Tax.
Hi, I'm Esther Gillies, the tax lady from EG Tax. This is our show, Ask the Tax Lady, and where we have our roving reporter out in the field talking to people about their special situation. And of course, we kind of chew it up, and you get to kind of watch us think. Of course, Tiffany Fabian and Christopher Fabian, my daughter and son-in-law, are my right-hand people, and we're going to talk taxes. And so we're going to go out in the field right now, and we're going to talk to Dominic, who's talking to a pastor.
I'm a pastor. How am I taxed differently?
Okay,
Great
I'm
question.
really glad that we had that question, because pastors have one of the most unique situations of any, well, I think they have one of the most complicated tax situations of any taxpayer, because they're considered dual status. And at EG Tax, we kind of specialize in clergy returns, don't we? Okay, so first of all, the pastor should be getting paid on a W-2.
Yep.
Right? If the pastor's getting paid on a 1099, that really is not good. They're supposed to get paid on a W-2. If you're getting paid on a 1099, you really should talk to your board about issuing the W-2. However, you can still do the tax return. It ends up kind of being the same answer, right?
Yep.
Right.
Yep.
All right, so on a W-2, the pastor then just claims wages, and then the next thing you have to find out is, are they in or out of Social Security?
That's right.
Right.
Opting
Right?
in or opting out. And so if they're opting out of Social Security, you don't have to worry about the self-employment tax because they've opted out of Social Security.
And they have to opt out in a very
1 year from
brief
the time.
period from ordination or licensure, correct? So when you first become a pastor, now our gentleman that asked the question, obviously I'm assuming he's been a pastor for some time. But in the first year of ordination or licensure, you can make actually make a conscientious decision that you believe that collecting Social Security is a public benefit, and the church should really should support you, and you conscientiously object to receiving and collecting and
Security
paying into
benefits.
Social Security.
Right.
And so they give you an option to get out. If you're out, then you don't have to pay your own FICA.
Right.
Right.
But if you're in, then you have to pay Social Security on your wages. What else do you have to pay Social Security on?
You
housing
that's
allowance.
a housing allowance,
Right,
yeah.
on
And
the housing
I gotta tell you, I've seen so many people have this wrong, and other firms, nothing against them, but they've made lots and lots of mistakes. So you have to pay self-employment tax on your housing allowance minus any of your expenses on the 2106, which
Right.
we don't have a 2106
Right.
anymore, but you still get to minus off the expenses.
Right, so if you have a housing allowance which has all been spent on housing, and there's no excess housing that you paid for your taxes, your upkeep, your furniture, everything with your house, if you spent the housing allowance, that housing allowance is not subject to income tax, but it's subject to FICA.
Yep. Right.
All right, like Tiffany said, less any unreimbursed expenses that you incurred.
Right,
Right?
right.
So pastors' taxes are way, way different.
Right.
So if you're a pastor and you have incurred expenses and you didn't know about reducing your FICA by the expenses that you've been incurring, of course, you can call EG Tax. We certainly love pastors, love to help you, and we do consider it a specialty.
And pastors can still put money into IRAs.
Right.
And they can still do other vehicles that are available for them because they want to plan just like anybody else does, and it's very complicated.
Right, very complicated. Okay, so, Dom, do we have another victim out there?
My aunt passed in July. She always told me she was leaving me a little something when she dies. I just found out that little something is $300,000.
Wow.
IRA. What are my options?
Okay, all right, so it's a sad thing when someone passes away because their life has ended, but one of the benefits of being the beneficiary is that you kind of get a little windfall that maybe you weren't expecting, and in this case that's what happened. Now,
Three options.
he I'm assuming, or the taxpayer got $300,000, but the question is, did they get all the money yet, and were they named the beneficiary?
Right,
You know,
good
because
point.
just because they got the money doesn't mean they were the beneficiary. It could have gone through the estate,
Right,
right?
right.
So let's talk about the options. And what's so important is beneficiaries.
Right, if she was listed
As a
as
benefit.
a beneficiary, there's three options.
Then she could take it all, right at first, she could take it over 5 years, or she could annuitize it over her life.
Right.
Those are the three options.
Right.
And what if there was no beneficiary listed, Chris?
Then it goes to the estate, and the estate pays taxes on it at a much higher rate. At that level, you're looking 39%. So basically 40% at least to the federal. So 300, that's $120,000 in taxes.
Just because you didn't name a beneficiary.
less than
So
it
if
is.
you're watching and you have IRAs, you have annuities, you have pension plans, and no beneficiaries, put a beneficiary on your annuity, pension plan, IRA, because you want to make sure that it goes to your beneficiary outside of your estate. If the estate pays the taxes on it, it can be onerous.
And then also, my mother-in-law, sadly, my father-in-law passed away, so if your beneficiary is outdated, you have to call and make a change to your beneficiaries, which is really important. And so there's always work that has to be
Yeah,
done,
so,
but it's
you
really
know, what I
important.
always suggest is every certain time of year, in my life, it's always May the 1st. After tax season, I review all of my things. I sit down there for a couple days, make sure I got all my beneficiaries, and I kind of make if I pass out of this world letter, this is what you need to know. It's very important that you do that. I don't care how old you are. As a matter of fact, my son-in-law's boss was like 45 and was involved in a quad runner accident and died, and he died without a will. And so the
he had a
entire business went into like, actually just
Almost
went.
limbo.
It did. The whole business was like lost. Here, all these years he had built up this business, but because he didn't have a will, there was no smooth transition, and it was terrible. It went to probate and everything. So you want to make sure that you do these kind of things. And if you're sitting there drinking your coffee and watching us on TV and you haven't looked at each other, husband and wives, or make yourself a mental note, you're going to spend some time looking at your beneficiaries, writing up a plan, making sure you got a will, because we were all born into this world, and we're all going to be leaving, and you don't want to leave with a mess.
I was gonna say, and update it. I mean, you talk about wills, I think me and my wife are guilty of this. Our last will we did was when our oldest, who's now 24, was 2 years old.
8, 7, yeah.
And we had to put in who we wanted our child to go to in the event of our demise together. And, you know, that hasn't been changed, and now our oldest is 24, our youngest is 18.
Well, I guess I
think
know
we
what
can
you guys are doing this afternoon.
Changing our will.
Right, I mean, you just have to do it. And the thing is, this is one of the benefits about watching a show like this, is that you just have somebody kind of say, hey, you gotta do this, right?
Right,
Yep.
right,
All
right.
right. I'm Esther Golias, the tax lady from EG Tax. We have 30 area offices to serve you. Our office hours are 9 to 9 Monday through Friday, 9 to 5 on Saturday. We have one mall office open on Sunday. The rest of us are relaxing and catching up on Sunday. That would be the McKinley Mall. If you have any tax questions, you go right to our website at egtax.com. There's a little link, Ask the Tax Lady. You can call any of the branch offices. We've got real people that'll help you, because we really want to help you. Or you can call our corporate headquarters and ask for any of us or any of our corporate staff. We have enrolled agents, we have tax attorneys, we have wonderful staff to help you,
CPAs.
and our CPAs, and our fees are more than half less than what you would pay to a national firm. We do everything they do, offers and compromise, refund loans. EG Tax is there for you. We're going to take a short break. We'll be back on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call R.J. Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let R.J. Gullo Companies put their 40 years of experience to work for you. Call R.J. Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
I'm Esther Golias, the tax lady from EG Tax. This is Ask the Tax Lady, where we have our roving reporter out in the field with people asking tax questions. And Christopher Fabian, Tiffany Fabian, and myself from EG Tax, we're going to talk about it. We're going to chew it up. You're going to hear probably more than you never wanted to know about taxes. And this is our way to get you to make sure that you do your return right, kind of tickle your brain to make sure that you get everything that you're entitled to. And of course, if during the week you have any questions, you can go to our website at egtax.com, ask the tax lady. We will answer your tax question. There's no charge for us to answer your questions if you call any of our branch offices. All of them are open 9 to 9 Monday through Friday, 9 to 5 on Saturday. We have one mall office open on Sunday, the McKinley Mall, during normal business hours. And all of our help to answer any tax questions is absolutely no charge. Our fees are more than half less than the national competition, and we have a wonderful guarantee. We do everything they do, probably more.
And even if you want your refund advance, we have those
Everything,
too. Yeah,
everything.
you got
Okay,
it.
we're going to go to the field, and we're going to talk to Dom. What do we got?
I'm looking to trade in my work vehicles for new ones. I was told by my accountant that there's no tax on this. I've owned the cars for 5 years and I know a little bit about depreciation, so that doesn't sound right to me. So my dad told me to ask you.
He's thinking of trading
Okay.
in vehicles?
All right, so under the change in the tax law, the only thing that can do a 1031 exchange is real estate. So you can no longer exchange your vehicle for a vehicle. So the sale of those vehicles that he's going to trade in, whatever the trade-in value is effectively a sale. Right? And not only is it a sale, it's a 1245 change sale. So that means it's recaptured as ordinary income. So if he paid $100,000 for the vans and he gets $20,000 in trade, he sold them for $20,000. So the $20,000 ends up being taxable income on the tax return. But the new vans, if they buy, they're far more liberal. You might be able to do 179 expensing and expense a lot of the vans on the other side. So you're going to, with income on one side and expense on the other.
Right, so the
Right.
dad
But you
was
gotta
wrong
also
and you were right.
Play into the 20% pass-through,
That's true.
so you got to see what's best.
Which way
and-
you, I think when we went to that seminar in the summertime about the tax reform, I think one of the best things that I learned was you have to plan for business owners. You have to see if using depreciation will yield a better answer with the tax reform, with the 20% pass-through. So you really have to plan when it comes to depreciation, right?
Right, so what I think Tiff and Chris are talking about is that if you expense most of the new vehicle, you're gonna end up with a immediate write-off. What the thing is, that's money that will not qualify for the pass-through deduction, the 20% pass-through. If you lose the pass-through, you've really lost a deduction. Whereas if you spread out
Your
the depreciation over a number of years, you're still gonna get the pass-through, and you're still gonna get the deduction. So if you front-end load it, you definitely lose the pass-through.
Good
But
question.
some people say, well, I'd rather not pay taxes now rather than waiting until later. So it all comes down to your own tax situation
Right.
and your business model and how you feel about it, right?
Right.
Okay, Don, what else we got?
My divorce is about to be finalized, and I'm going to receive $1,500 a month for child support and $3,000 a month in alimony. My lawyer suggested talking to my tax person to see if I could change the allocation. Any thoughts?
Well, since this is 2019, if that person is getting alimony, that person should be just hop,
Tickled.
skipping, and jumping down the road
On the
because
federal.
because it's tax-free,
Yep.
right? Not deductible from the payer's point of view.
Right.
And they should be, because if it's a 2019 divorce or modification, then the alimony's tax-free. However, on New York State,
It's all the old law, and so that means then the alimony is taxable to him or her, and the person who pays it gets to take it
Right.
as an adjustment to income.
right,
it's
so we're
two different
dealing with
sets of
two
laws.
sets of rules. On the federal, it's tax-free, not deductible to the payer. On the state, it's taxable and deductible to the payer.
Yeah,
All
and
right.
one thing is the child support is never taxable, so that's not an issue at all.
Right,
Really
and
good
the other
question.
thing is, divorces are so contentious anyway. Now, if the ex-spouse is paying the alimony and paying the child support, and the person receiving it is the custodial parent, in essence, they get the free alimony, the free child support, and the deductibility of the children. So
Right.
this is where attorneys really have to be skillful, because it seems like you gotta help dad out to get the children, but in order to do that, for the dad to claim the children, the Form 8332 has to be
Right.
signed.
Right.
And that should be done, I think, at the time
Time of
the
divorce.
divorce
Yeah.
is
Yeah.
done,
Yeah.
so it waives all future years, as long as the non-custodial parent is paying all this stuff, that they would get the
Yeah,
right
I-
to claim the children,
I
which would
think a
help
good-
them out somehow.
I think really good advice is before you sign on the dotted line for a divorce is that you have a tax accountant
Right.
look at what the bylines are.
You want to make sure you're talking to a tax expert, because this is not easy. And I will tell you, and when you're getting your tax return done, when you say, well, I really think I should be able to claim the children if you're the non-custodial parent, it's too late. Then we have to go over to Stella over here and say, Stella, will you let Jack claim the kids? And she says, no, I never, he was such a bum. And then it's not a good thing. So you want to make sure that you do it at the time that the divorce action, at least you got the attorneys
then-
doing all the dirty work.
A lot of moms or dads, whoever, are the non-custodial and they pay money for child independent care, for babysitting or for wee wobbles, daycare. They don't get to take the advantage of writing that child independent care. It's the person who claims the child, the custodial parent, who would get to claim the child independent
Right,
care.
right.
So there's a lot of nuances.
Okay, what else we got? Dom?
Dom.
3 minutes left, I'll do a short one. My son was just diagnosed with dyslexia, and the doctor suggested that we should go to the Gal School in Alma. Is there anything we can do to write off in our taxes?
Yeah, now that, a lot of people aren't aware that private education or education to alleviate a specific medical problem is a deductible medical expense. And the Gow School is a wonderful school, and it deals with children that have those kind of learning disabilities. And even the room and board is going to be a medical expense. I have
Which is
some
really
clients
costly.
that they both work 2 jobs because they want to pay for their child to go and get the very best leg up on life that they possibly can get. Now, of course, they're going to have to limit it by their,
They're 7.5% of their
Right.
income.
Right,
But
right.
then they also get to add in glasses, dentist, prescriptions.
for the whole family.
For the whole family.
Yeah.
So, yeah, unfortunately, it's a sad situation for them. But it's something that can be fixed.
Right.
Corrected, and they get to use that expense to help them on their tax
That's
return.
exactly right.
And,
So,
and of course, the standard deduction is doubled on the federal, but on New York State, we're back to the old law, so perhaps It might be harder to achieve on the federal, but something that you're going to see
But of course,
recaptured on the
with the
state.
cost of Gauss School, they're probably, unless they're gazillionaires, they're gonna
Right.
be able to write it off.
Right.
But you're not gonna get as big a benefit for medical as you did in the past because of the doubling of the standard deduction. The important thing is, everything, because you're gonna be able to exceed that 7.5%, everything that you do in your family is gonna be deductible medically as well. So you wanna make sure you save all your receipts.
Or you might want to do something that you were putting off, like if you're putting off big dental work, if you have a lot of bills for the Gauss School, you might want to add it to the tax year that
And
you have other bills.
prescriptions, right?
Yep,
Prescriptions,
yep.
Christian Science practitioners, a lot of things are deductible. If it alleviates a specific medical problem, it's going to be deductible as well as the health insurance, right? Okay, I'm Esther Golias, the tax lady from EG Tax. This is Ask the Tax Lady, where we answer your questions with our roving reporter. Now, if you'd like to be more intricately involved in having your tax question answered, you can join us on Saturdays on WBEN from 3 to 4 at radio, where you can actually call in and ask the tax question, be on air. And then if you're kind of like want your privacy, you can go to our website at egtax.com. Go click on Ask the Tax Lady. Ask us a tax question. We're happy to answer it for you. Or you can call any of our branch offices. We have 30 of them in the area. We have 2 out of the state that also prepare taxes, and we want to help you. We're going to take a short break. We'll be back on the other side.
I'm attorney Dennis Kitchen. Now is a good time to look at your finances and your debts. How much debt do you have right now? If you don't know, or if you don't want to know, it may be too much. Isn't it time that you talk to an attorney about a fresh start? I've been helping many people in debt over the years, and I don't charge for an initial consultation about debts. Call for a free consultation. I'm Dennis Kitchen, and I'd like to help.
So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Attention real estate investors. Thinking of buying or selling real estate investment property? Call RJ Gullo Companies, qualified intermediaries for 1031 exchanges and real estate investment specialists at 716-675-1500 or visit them online at rjgullo.com. For a free consultation when buying or selling real estate investment property or to pay no tax through a 1031 exchange, let RJ Gullo Companies put their 40 years of experience to work for you. Call RJ Gullo Companies at 716-675-1500 or visit them online at rjgullo.com.
My husband and I have a mortgage with a balance due of $100,000 and a home equity loan of the same amount. We use the home equity money to put an addition on the house, which costs $50,000, and then the rest of the money we use to pay off our son's college debt. Are we okay for a mortgage deduction?
Well, so the law is under the tax reform, the federal, we have tax reform, New York State, we go back to the old law. And so under the tax reform for the federal, you can take your primary mortgage and you can take home equity up to debted acquisition.
Indebtedness or remodeling indebtedness. So only half of the home equity is going to be
allowable. The one,
right,
the
on the
other
federal.
half, the other half that they use for sons paying off their student loans will not be allowable. So under the tax reform for the federal, half is potentially allowable. The other half that they use for their sons' college is not allowable.
But on New York State,
It's all
deductible. But this makes it very difficult when you're doing your return, because you have to really ask yourself, this mortgage debt how did this come to be?
Yep.
These mortgages that I'm paying. Oh, well, this was to buy the house, deductible,
And
on both the federal and the state. Oh, this is a home equity. How did I come up with this home equity? Oh, it was to put on that $40,000 addition. That's deductible. Oh, we also bought a car with 20, not deductible. However, on New York State, it is deductible. So you have to actually go back and analyze
Right.
how you came up with this debt.
And then don't forget the mom and dad, if their name was tied to that student loan, if the student loan company could go after their assets, they could potentially write off $2,500 of that student loan interest if, again, they were owned and tied to that student loan. So don't forget the student loan.
But not if they paid it off, though.
Right, but if
But
you paid
there's
it,
probably
there's
still
still
some
probably some
interest.
interest. And so don't
Yeah,
forget
right,
about
student loan interest is still deductible.
It's still
It's
deductible.
We do have a nice worksheet on our website to help you with your mortgage interest. So before you come into your tax
you
person,
can
whether it's us,
find
somebody
out.
else, you can download it and fill it in and
Because it just isn't just getting that form anymore, and you look at it and go, oh, okay, this is deductible. It is not necessarily deductible.
But it is on New York
But on
State.
New York State, it's all deductible. So you probably know the federal government has restricted your taxes and itemized deductions. Bad news for New Yorkers, but how did the state compensate? All those deductions that are eliminated or restricted on the federal are still deductible on New York State. Complicated? True. A double set of rules? True. But it's a great big benefit when you do your New York State return. EG Tax is your hometown tax team, and we want to work hard for you. This year, come join our family. Ever notice how people are always changing their hairstyles and colors? Some are better than others, but all of them take time to get used to. Well, taxes are like that too. It seems like Congress can't keep the same tax laws in place long enough for us to get used to it. And this year is really no exception. There's over 450 tax form changes and thousands of new computations. This change affects everyone. This year, come join our family.
Honey, we still need to do the last form for our taxes.
Okay, I'll start on that next.
Are you sure?
Look, I just put this together in 10 minutes without the instructions.
I don't think so.
What starts off easy could end up to be a major complication. There's over 450 tax form changes and thousands of new computations. EG Tax has studied these changes since they passed last year. Our job is to make sure you and your family get the largest tax refund. This year, come join our family. Hey, I'm Esther Goliath, the tax lady from EG Tax. When it comes to taxes, we hope that EG Tax is the firm that you'll come to. We love helping people. Our whole job is to make sure that you don't overpay your taxes. We want to make sure that we do the very best for you. I mean, we truly care. We're family owned and operated. We're a local firm. Tiffany is my daughter. Christopher is my son-in-law. We're all enrolled agents. We have CPAs, attorneys on staff. We have a great group of people who all we feel this way, that we care about serving you in the community. So until next week, I'm Esther Goliath, the tax lady from EG Tax. If you need the very best tax help, we have 30 area offices to serve you. Go to egtax.com. Have a great week. Bye-bye.